Testing. Okay, hello, Jamie Saettele here with the Midweek Strategy Webinar. I had some problems with the audio just now. Let me know that you can hear and see. PK says good. Eileen, what's going on? How you doing? All right, Pooja, how you doing? Great. All right, so this is your November 10th Midweek Strategy Webinar, post-election webinar. And obviously the big theme, one of the big themes that I've been kind of talking about, I guess, for a lot of the year is the inflation trade, right? So we've been discussing things like gold-silver ratio, copper, blah, blah, blah. We haven't really seen, and currencies do jack for the most part. So maybe that's going to change now. Maybe the market was just waiting to get the election out of the way. One of the biggest, I think, things to look at right now is actually gold. Okay, so hold on, what is this? Don't need that. All right, so gold has been absolutely pummeled. Here's a weekly chart. And, you know, markets have a tendency, like back here, right? If we look at the long-term page, I'm not sure if the comments are still there from back then. But if we really take a look at some of the comments on the long-term page, you remember back in the summer, we were talking about, getting a bigger corrective move. Well, gold, topped, but it really didn't do anything. Went sideways, and then you had like this one-day sell-off. This is a weekly chart, but you had this one-day sell-off all of a sudden in the first quarter of the year, and gold got just murdered. Well, we rebounded, obviously, and then the election spike. And since then, gold's, gotten smoked. So what I'm thinking at this point is that the market's going to finally get to the support we were thinking about, just kind of in a really screwed up way. So we're looking at maybe an A, a B, and wait, you guys can't see the gold chart? Hold on. Can you see the gold chart now? Okay, now you can see it? Okay, great. So the gold chart, we scroll back and it's still the same thing here, guys. We got the trend line that held, and it even held on the election spike, believe it or not. And to me, this is finally getting somewhat clear. So A, B, decline in wave C, you'd be looking at least getting down into, we have two equal legs at 1203.44, okay? And we have the 50% retracement of the entire move up from November at 1210.64. Okay, so this chart is pretty clear and says that gold is going, a little lower. I guess, depending on what your definition of a little is or not, you're talking about at least a $50 decline here, maybe more, but that would be the first level I'd look for, big support. Okay, so with that said, what we're looking at then is dollar yen. Dollar yen and gold, as we know, have a pretty good relationship. So if we think gold's finally going to go lower than dollar yen, I guess it's going to go higher. Looking at the get the longer term picture here. So the daily chart, I had noted last night in the Euro Yen article or whatever to watch for basically 104.80, 105 support in dollar yen, and this was that was the top of that was the median line that the market had kind of sold off from, if you recall. So we did come into that last night during Asia. The market's taken off. We've actually gotten to the 200-day average now for the first time since January, that was the negative interest rate announcement thing. So with gold, potentially heading down a bit lower, I'd be treating this as a real breakout at this point for dollar yen, with the first test being up probably near the trend line at 108. Again, that's just the trend line that goes off of the December and January highs. Okay, so the 4-hour chart, which I put on Twitter, this is what I would follow at this point. And you can see it's just a fork. Okay, we're drawing the fork from the June low, the July high, and then the low down here on 926. And the parallels are really clean. This is what we were following before. It's okay that you went through here. I mean, let's be honest, this is kind of bullshit because it's definitely an anomaly, right? So you can see that you're at what we would call uptrend resistance now, and we have kind of paused there a little bit. So what I'd be watching for then is essentially to buy a dip. Now, the retest of the high is 105.53, right? And if we can consolidate a little bit and get into there at some point, either, well, tomorrow's Friday, so it might not be this week. It could be tomorrow, it could be early next week. I'd be looking for support on those parallels, right? Essentially, you're just trading within a range, but it's higher within this range. Be looking here, and then the next level, near 108. So that's the idea with dollar yen. Hopefully get a chance to do it. Don't know if this market's just going to go straight up or if it's going to try to pull back and retest the breakout level, essentially horizontal as well as slope. So that's the idea with dollar yen. It's probably a good time to look at some of the seasonals. Dollar yen seasonals are pretty positive into year end at this point. In fact, last week was a bottoming point, so it is probably a good idea to look higher. Dollar index itself. Remember, dollar index, it's 57% euro. Okay, so when you're looking at dollar index, just because the dollar index turns down after next week does not mean that it's bearish dollar across the board. This is mostly euro. Okay, so euro and European currencies for the most part, but really the dollar comes into a top against the euro and its European counterparts on a seasonal basis after next week. So not this week, but after next week. And that's interesting because if we look at the analog for euro, which we've been following for some time, and it does seem to be the right one, I guess. It suggests something quite similar. Right. So this is it. Again, it's going to be not quite scale perfect, if you will, right? But more or less fairly accurate in terms of its calling, bigger shifts. And indeed, we have what appears to be a bigger shift with the low down here on October at the year open, and obviously we are right at that same level now. So if euro's forming a low, not in a super big hurry to buy it, as you can see, we could be sideways chopping around for a little bit, and then you would actually have the idea for a low. This says around November 20th or 23rd or something, which happens to be when the seasonals turn down for the dollar again. Okay, particularly against the euro and its European counterparts. So that is kind of really what I'm stalking, if you will, into the end of the year. So far we've got basically dollar yen looking to buy the retest at, at spot 50. So 105.50 would be the retest. And then looking at euro, a little range, and then coming into the low here, maybe in a week or so, a week and a half. And if we look at the short-term chart for euro, here you go. Again, we've got that year opening price. A bounce here and some range would not be at all a surprise, given 1, 2, 3, 4, down in 5. So I'd be looking for a bounce in euro here. Okay. As noted last night, I do think that you get resistance for this up here. So like 110.40, 110.50. 110.40 is that ECB high, of course, from October 20th, the October meeting. And then 110.55 is the week open, but it's also pretty close to the August low, 110.45. So it's a good zone up there, I think, to kind of be looking towards. Again, it's tough to just say buy it right here. I mean, because you have no momentum, and for all you know, it's going to take out the lows. I mean, you see a 5-wave decline like this, it tells me to look for a rebound. And if you start to get the rebound, then sure, maybe we have an opportunity to buy it, right? But at this point, you're just sitting on the lows. Okay, so there's not even, it's not necessarily the most pressing, long setup in the world, but you wouldn't be surprised to see a bounce, and a fairly sharp one over, the course of the next few days, with euro dollar. So that is euro and dollar yen. They both kind of say the same thing right now, right? You've got euro at the year open. Wouldn't really call it like major support by any means, but it is at, a level that you would, think could hold. And you've also got the 5 waves down, and then dollar yen up into the well-defined slope area that we're talking about. Would not be surprised to see a little pause here either, right? But in both instances, you would expect to see support for the dollar on the next move down, and that's especially true for dollar yen, right? With the gold analysis and gold saying that we could go a lot lower, at least 50, 60 bucks, you'd expect to see a good bid under dollar yen on any weakness with that. So that is the two biggies. When you combine them, right, as we talked about here last night, this is euro yen. And this chart, if we look back, right, this is a channel, really nice, goes all the way back, as you can tell, to 2014 high. And then you're just looking at, again, the median line, lower parallel, 25% line, 75% line, okay? So with that, coming through the 25% line, this line, it's been super, is an inflection point. And not every time you get there, but for the most part, I mean, support, support, support. Even here, resistance, subtle, but resistance. Finally, the last couple touches on it led to big declines, including the high on Brexit. Well, here we are again, and we have poked through here on an intraday basis, of course, but we have come back. So, we might flirt around here for a little bit before we try to move higher substantially, and that would not be a shocker. Again, you've had a lot of, instances here where you have traded around the area for a bit, right, before you separate from it. You do have resistance at the high today this is daily reversal resistance. The high, July 21st, the close of that day is 116.65. And following a structure here, which seems to be working out pretty well. Just connect these lows and, put your parallels in there. But I would be looking eventually for an upside break here, right? I take this as pretty important, the behavior change. And again, the thing with gold and yen, dollar yen, if it pulls back, you want to be getting, on the long side, probably at 1550 if you get a chance. So euro yen looking good. Pound yen, again, thought that we had a wave 4 move higher. Still possible. This is why you don't just sell at the level, you wait for it to react. And this is pound yen. So look, I mean, maybe it, does end up reversing lower. It's not something that I'm really in a hurry to try to pick a top on this. It's a good way to lose all your money. But the idea of a 5-wave move down a diagonal from the highs up here is still very much viable, very much possible. Okay. Euro pound might offer some clues as far as pound yen and maybe pound in general. Take a look at euro pound. So here's your slope, right? And you can see that this resistance line, and this is not, one of the best resistance lines or former resistance lines I've ever seen. Eileen's got a great question, which I will get to here in just a moment. Not the best resistance line because you do cross through it a lot, but generally speaking, you have rebounded off of it come off of it. You did have some really good touches on it here right after Brexit. So this is a level in euro pound that you might want to watch for support. It's near 86. Lines up with this high here. 86.25 is that high. And you got the lows down here. So maybe something you get a rebound off of. I will address this question from Eileen, which is a great question. Eileen says, when you get a chance, what are your thoughts about types of strategies that work better in the current environment? So, your current environment obviously being more defined by going into maybe a higher volatility trending phase, potentially. So for me, what I look for, so let's take dollar yen for example, because it's a perfect example. I do believe that we're going into this, higher volatility type of trending phase. And tell me if I'm wrong, but what happens when, at least for me, is say, we're at dollar yen, you come up, we're at this resistance, right? So like here's the dollar yen chart that we just looked at. We have this resistance here, and you start to come off. And you're like, oh, this could be some big reversal, whatever. Well, we've already, said or, made a kind of an analysis that, we believe that the path is actually down towards, or the bigger path is higher. So if you get support, you get dips, you want to buy them. Well, move to an hourly chart. Here's an hourly chart. Move to an hourly chart. And when you get those dips, two things to watch for. One, I watch for the 24-hour average and see how it reacts, right? Sometimes you can buy into it. During good, strong, moves, you will see the 24-hour average act as a decent pivot, okay? So these are during particularly strong moves. So, you can even see here on the way up, you get strong reactions to the 24-hour average, strong reactions to the 24-hour average, right? So this is during especially strong moves, not like, I actually expect that we can probably go through it the first time, get down to 105.50. Another thing, and talk about RSI, with the reversal signals a lot, but during these strong moves, even on the hourly chart, you won't really get RSI down during an uptrend. You won't see RSI really get down below 30. So when you get RSI into 40 on an hourly chart, even look to buy the dip, right? So that's what we be looking at. Canwall, my man, what's up? We'll be looking at crude and silver here in a little bit. So that's just a few tips. I think Eileen and everyone else, real simple, but simple works the best. So it's like, do your analysis, have your levels mapped out. So like, I know that this level is 105.50 that I want to get involved in with dollar yen. I'll have even more confidence, to really pull the trigger if when it gets down there, RSI is scraping 40 and then maybe turns up, tighten stop, add more leverage or something. That's one thing that I do like to look at. What else do we have going on? I had a few other charts that I wanted to show. The dollar in general, we haven't really looked at this index in a while, but the US dollar index, the FXCM one, if you recall, we had okay. So don't forget about this. This is still very much in play. This is just the old channel. Trend line on the way up, channel became support, became resistance, and we're back at it again. I mean, it looks so similar to like the other tops that you've seen in the dollar in history. So go to a weekly chart. And there's two big periods that we've obviously been looking at. This one, right? And you can see it, 3 peaks, right? 1, 2, 3, 1, 2, 3. Here's another one right here. All right, 1, 2, 3. So this is the 1993 peak. I wrote down the figures here last night, actually. You've got, this is February 93 to February 94. And the whole process took 53 weeks, okay? And it basically, you had 26 weeks, 27 weeks. So it's kind of a perfect, topping process, if you will. With, the midpoint, the middle high between the two other highs. Then October 2000, and this is the same analog we've been following with euro, right? But October 2000 into into January 2001, and that took 66 weeks total. So this was 53 weeks, right? This was 66 weeks. This so far is 85 weeks. What I kind of found interesting is that the ratios are the same. So you have, 66 divided by 53 is like 1.24, and 85 divided by 66 is not far from there. So you've got basically a bigger degree of a top each time. Okay, so remember this. This is the opposite of the euro, right? That what we've done here with the euro. And this says or you have to scale it out, you got to stretch it out because the this is a bigger version. So I mean, this says that we're kind of in topping territory, and that chart I think says it all, which with the seasonals being the week after next. So it's perfectly possible that we hang around up here. You know, the dollar hang around means euro hangs down here for a little bit into, you know, next week. And then finally after next week, perhaps you got the final top in place. At least that's potentially what I'm thinking. And again, what's this move being driven by? If you think fundamentally, what's this move to be after Trump became president? By move, I mean the move in the last 2 days, right? Just the move in the last 2 days have been driven by everyone finally starting to realize that interest rates are going higher, right? We've been talking about this for freaking like January, but they're finally seeing it. Interest rates are going higher, and you can see it by the bond market. Here's the bonds, 30-year T-bond, okay? Weekly chart. Well, funny enough, we've actually come into an area that I think we could actually bounce. And if we do, that means rates are going to come off a little bit, and you're actually going to start to see the dollar probably come off. And, you know, this is a weekly chart, so by bounce, I mean you could bounce and consolidate for a while. Something else was interesting that I saw last night, and that is dollar. Hold on for a sec here. That is the dollar South African rand. So dollar rand's actually up huge today, but it's up like 4% or something. Nicholas has a question, and I will get to your question here right after I finish this little tidbit. So dollar rand, as you know, has been basically, it's been falling since January. So, you know, despite the dollar strength story, it's been going lower, and it's up pretty big today. But the big interesting part about this, the 3 big peaks in dollar rand. You had one here in 2001. The dollar top was actually just a month later. All right, but then you had, look at the next one. You had the dollar top back in, or the dollar rand top back in October 2008, right? Ultimately, the dollar topped 4 months later. So maybe we're even more lag now because dollar rand topped in January, and here we are pressing another high, right? So I don't know. That's another interesting thing to think about. And I had a question here from Nicholas. Nicholas, you had a question. You said, could we see the same thing on the stock market? So you want to see me plot? You want to see me plot the U.S. dollar and the S&P? Is that what it is? A top and reversal in the indices. Okay. Oh, let's see here. Actually, so let's look at the, if we're going to look at the S&P or the stock market, whatever. So this was the Monday post. Actually, I forgot about this. I wanted to talk about this. So everyone knows what happened with the election at this point. But here was the thing, and I put this out, who will win and how will the equity markets react. Okay, so the majority said Clinton markets go up. I figured Clinton would win. This has nothing to do with like what I want or whatever, but I just figured she would win. I mean, it was like no one really thought it was going to be close, I guess. But goes to tell you, kind of everybody got it wrong. And markets go down. So I thought she would win, and I figured markets would gap up, and then everything would tank, right? Because no one thought it would happen. Usually what no one thinks is what happens. So the idea, again, was market getting wrong-footed. Well, it ended up being the second least popular answer, which was Trump wins, markets go up, right? Trump won, initial reaction lower, real move higher, okay? So with that, it's the S&P chart. 2050 was the level for support, basically. And if we look at the S&Ps, pound dollar looks like it just wants to go freaking through the roof, doesn't it? But if we look at the S&Ps, obviously you're not going to see the dip to 2050 because this is the cash market. But if we look at the futures market, you can see it pretty well, right? And we'll put that up for you. So let's put the same lines that we have here. So the low is 2027, but on the same plane, right? On the same slope is what we were looking at. So it's right on here. Okay, and now we're already back to resistance, or almost. And that's this line, the upper parallel. That upper parallel is slightly higher, right? It's closer to 2200, but the idea is that you're at resistance already. And to give you an idea of just how crazy the election night move actually was, here's the S&P. This, okay, 1833.50 and 2175.25. That's the 52-week range. In the matter of hours, you have almost traded, or you basically traded 50% of the entire 52-week range. 50% of the range, midpoint was 2004. So that's how extreme the move is. I mean, literally in a matter of hours, you took out half of the 52-week range. So as far as I'm concerned, the S&Ps, it's really, it's same old. I mean, it's continuing to follow, I guess, these slope lines here. We went through this one already, but the new high up here, and that gets you what, 1, 2, 3, 4, 5 diagonal. This was a scenario we talked about a while ago. Again, we thought maybe that was going to happen. The way the market got there was not quite the way I thought it would get there, but it seems to be happening. So, 1, 2, 3, 4, 5. for your diagonal to finish up the move from February. And that probably ends up, you know, correlating, if you will, with your next, you know, peak in some yen crosses or something. That's the way I would think about it. What about some of the other, some other good trade setups? Anyway, did that answer your question though, Nicholas? As far as, you know, as far as the S&P, what I'm looking at? Oh, correlation. Oh, between the two. Well, there is at times. So like right now there is. So there is at the moment. So like if I here I'll put up a chart to show you that. All right, so here's the dollar index. We'll compare it to the S&P 500. Yeah, well, so we're Nicholas asked the question. You think DXY may go down? Yeah, and don't forget, I'm not like bearish the dollar index right here. I'm saying that the trade we could be bearish after next week based on the seasonals and everything else. And you're at resistance, right? But just because you're at resistance doesn't mean that the market's going to necessarily just go straight down. All right. So the dollar has been, obviously in a correlation. You know, there's times when it's highly correlated, there's times when it's not at all. Okay, but just over the last few days, obviously it has been, right? So basically since, I guess, Comey and the FBI thing, dollar down, S&P down, dollar up, S&P up. You know, so I mean, it's not all the time. Now this may last for a while, but again, the analysis is done on each market. So the reason that I'm looking for a peak in the dollar is that you have the long-term resistance and you have the similarities with the three peaks, with the big tops going way back, and you have the seasonals turn down after next week, right? That's the reason why I'm starting to think that we could get, you know, turn over, right? That's it. It has nothing to do with the S&P. The S&P might try to get to a new high to complete that diagonal before it rolls over. Okay. All right. Two setups that I like. Obviously, talked a lot about Aussie for a long time. Eventually, this should go higher. I mean, kind of dumbfounded about that it hasn't. But hey, then it would be easy. I mean, look at, you know, we talked about copper for a lot, and copper's gone ballistic. I mean, look at this. It's one of the biggest rallies in this amount of time ever. And the Australian dollar just does not care yet. At some point, it will care. Doesn't care right now, though. So all we can do is kind of monitor it, and, you know, it continues to come into support, continues to hold support. So, like, you know, I wrote yesterday, watch this for a long position. We came into resistance last night, I guess, during Europe, and the thing sold off about 100 pips, and then we've just rebounded slightly. So, you know, Aussie, again, just waiting for it to stabilize. I mean, I want to be long. I just, you know, it's not going anywhere. Eileen asking, is copper running? I mean, look, there's going to be a million reasons. The idea as a chart, guys, that you don't too much care for the reasons. I mean, we've been talking about this basing thing in copper for so long. I mean, you had the trend line back in January. The behavior change happened on 10/28, and since then it's gone through the roof. We're now at resistance, okay? So I expect that we pull back a little bit with copper. One way to mess with the Australian dollar that could work is the there's pound dollar right here. I'll look at that in a sec. But one thing that could work with the Australian dollar and the Japanese yen, again, we have Aussie at support. I really don't want to see Aussie go much lower here. I mean, yeah, sure, you got the lower parallel in here, 75.20. It's pretty close to 200-day average, which is 75 today. But really, I wouldn't want to see it below here, right? It would kind of, you'd ruin the structure that you've had for the whole year. But something to watch out for in Aussie and yen, because with yen, remember, we're talking about maybe a pullback in dollar yen, okay, into 105.50 and then going higher. Well, if we take a look at Aussie yen has had a wonderful behavior change. Okay, so the channel, and I talked about this a while ago and wrote about it, the higher floor, right? The higher floor, and we ended up breaking to the upside, albeit, again, in a pretty screwed up way, with the market taking out everything and then going higher. But yeah, watch for support though on the pullback right here at the, you know, former resistance line. And this is well defined. I mean, look how beautiful that is. You get the 200-day average there as well. You got the monthly open pretty close to there, 79.70. So basically you're looking for support in Aussie yen near 80. Again, I think if you get that, most of it, if not all of the pullback, is going to be because of dollar yen, because I've got Aussie at support now. So, you know, I'd like to see, you know, Aussie hold up. And then if you get that dollar yen pullback, then, you know, you're looking at Aussie yen and dollar yen maybe finding support and then moving higher off of their breakout levels, so to speak. So I like that a lot. And then there's Euro Aussie, which continues to just hold up at this long-term median line down here. Eventually, I think it breaks. Again, I would watch for support. I would watch for resistance now at 44.10. Get the low from August. It's also the monthly open, okay? So 44.13 is actually the monthly open. So that fits well with Aussie yen dipping into support, Euro Aussie bouncing into resistance, and then we might actually get some action in the Australian dollar as it has to have reached peak quietness at this point. And now let me tell you too, you can see it really well on the weekly here. I don't have anything else on it. I mean, look at this trend line. Look where we topped after the election. Okay, and you're also on a median line, and this median line is super well defined. I mean, you've touched it 1, 2, 3, 4. This is the 5th week. Breaks through median lines are violent. Okay, so what I'm saying is that eventually you're going to get a break. When you break through this, it's going to go like this. It's going to break it, and it's going to go. At least that's what I think could happen. So be careful or better yet, try to take advantage. So Euro Aussie into resistance, Euro Yen, Aussie Yen into support, Dollar Yen coming to support. Those are my three favorite things probably right now. Euro Dollar, I'm looking for a bounce, but would be more willing to trade it if we kind of hold up, and range around for the next week or two and form a base, because that in line with the analog, then we could really have the actual major long-term low in place if we get that. Pound dollar, here's a good short-term idea. I tweeted this out actually right before the webinar, but you might have a triangle here, right? Remember, we have the behavior change, okay? So pound dollar, you might have a triangle. If you do, we could get one more dip in the triangle, right? Kind of A, B, C, D, wave E lower, get wave E lower, and then to the top side. So this will be an idea for a trade certainly going into Friday. Just off the top of my head real quickly, just without kind of looking at, real detail, but the median line, okay, in the high volume level 2436, week open 2450 is probably going to be your best shot as far as maybe getting support. So we could be coming into the, again, the little D wave top in the triangle as I'm speaking here. So again, A, B, C, D, E. So looking lower in an E wave. And that would get you maybe down, 100 pips from the top potentially, then go higher. Kiwi did not really hold the level I was looking for it to hold, although we're at it now. Remember, it was 72.20. We dipped intraday all the way down to 71.70s. And, if we can close up here, especially above 72.40, I think it's a good sign. 55-day average there. Again, 55-day average has been pretty good for inflection points going back to the summer. And I know there's a lot of talk about this being a potential head and shoulders, and that's certainly, it could be, but that's just the thing. It's a potential head and shoulders. You know what else it could be? It could be a triangle. This could be A, B, C, D, E, and we're about to go rip-roaring to the top side. So it's not a head and shoulders until it's a head and shoulders. It's not a head and shoulders until you break support. So at this point, we haven't broken support. So I still think it's wise to look on the long side weakness. What else? Crude oil. I know my boy Canned Wall wants to look at crude oil and silver. So crude oil. So crude, remember we talked about 43.56 as a support region, and that was the January low from 2015. This was last Thursday. We talked about that as support. Ended up being the actual low, and then the election came out. You spiked below it, although it wasn't that much. In fact, the reaction in crude's been absolutely nothing compared to everything else. So, here it's business as usual. I'm looking higher here, but A, B, C wave higher into probably 47 or so before you get renewed selling. So got a low down here. Dangerous to try to trade this long into here, in my opinion, just because it's downtrend. You have a bounce. You don't want to get caught basically buying a bounce in a downtrend. But the setup is to look for basically resistance up here. Okay, you've got the confluence, old trend line, new trend line, short-term downtrend line, especially, and then maybe a three-wave move up, A, B, C. So that's what I'm looking at with crude. Higher up there, then lower, because I think you could go A, B, final C wave to complete the entire move down in crude oil. So that's where I am with crude oil. What about silver, you ask? Silver. In Canwell, you asked, you said, especially silver, and you mentioned here that silver is not declining like gold is. Am I right? That's what you were wondering? There's a reason for that. So I wrote a thing a while back, and it's on the website, about the gold-silver ratio, okay? And the gold-silver ratio, let's see, let's make it right here. The gold-silver ratio is, we'll do, let's see. Yeah, we'll just do this. We'll do the gold-silver ratio. Okay. All right. This is going back to 1975. All right. So this is basically since the end of Bretton Woods. Gold-silver ratio. Okay. This tends to get you tops when you get basically bottoms in inflation. So that means you're getting tops in bonds. Okay. So when you're going into an inflationary environment, you're going to see gold underperform silver or silver outperform gold. Okay. So while they might both go down a little bit, gold's going to go down more. You know, and while they both maybe go up at times, silver's going to go up more than gold in this environment. So, you know, just look what was this down here? This was the top in the metals, right? It was the bottom in the gold silver ratio. So I think metals have bottomed, but silver's going to outperform. So if we get to silver specifically, where are your price levels here? Well, you're actually still holding a very beautiful structure, as we see. You could poke a little higher in silver. You do have this low here at 1920, okay? And you've got the median line there as well, which of course has been pretty nice as far as resistance and support at times. Okay, that's log chart. It's arithmetic chart. But 1920 is where you could find resistance here. Here's a 4-hour chart as well. Now, this looks quite different than gold, of course, as it's holding up well. You can see funny support here. So I would be looking towards 1920 and then maybe lower. You might even have another trend line up there. And you do. So this area 1920 Canwell is where I'd be thinking silver could head to before it turns down. Okay. Right. So silver. Okay. Well, I mean, you're saying you're short. That's fine. You know, just understand that silver could go up towards about 1920 or so. All right. Gold, if you want to be, you know, gold is obviously the weak one here. It's coming down through short-term support. So if you get, you know, gold does a little bit of bounce here potentially as we've tanked, you might end up seeing silver go to 1920 and then roll over. Okay. One more thing I wanted to look at, because it's in the news a lot lately, is the can't think right now, is the dollar Chinese yuan, dollar CNH, right? So very much in the news here lately with dollar CNH. And as we know, when these things happen in the news, you will oftentimes see the market in question react. So it might turn over in this case because you've been going higher. Well, I would pay close attention up here, 685. Okay, you've got the slope line here, original slope, right? And then you've got a parallel that extends off of the high from January, which of course was the panic highs, right? So I would be looking at dollar CNH as a potential indicator for perhaps, you know, you get the end of a bigger dollar move. And whenever you say something like that, you know, it helps to look at and see if you're full of crap or not. Well, I don't have too much data here, do we? But that's okay. So it's a weekly chart. Let's put up DXY on this. So is there any truth to turning points at all in dollar CNH and the dollar index in general? Actually, there is. What do you know? See, this is what I'm saying. Evidence is good. You want to, when you have something like this, you want to make sure that you're not blowing smoke up your own ass. So you want to look at the charts. Well, sure enough, the peak actually in March, right, was right here. So that's a good one. Wouldn't really say this worked out too well, but eventually dollar CNH did roll over with the dollar decline. So, you know, this one, and we'll give it an X. No good on that one. But recently, they actually have moved together. So the combination of dollar CNH coming up into what I think could be a really big area, and the media talking about it, starting to get pretty loud about it, right? You start to hear about this dollar CNH, and everyone's talking about it because of obviously now because of Trump, and you know, people are talking about China, you know, devaluing their currency, blah blah blah. Well, you can bet it's going to become a big story. So I'd pay attention to this. It lines up again with the seasonal aspects in the dollar index itself. Turn down next week. The analog in 2000, 2001. It's in agreement with that. So just another thing to pay attention to. Cool. Canwall, thank you. Thank you so much. That's very nice of you to say. You know, I work hard to try to provide you guys with interesting, hopefully useful information. Not always easy, of course, but all we can ask for is we try our best and always give it your best shot. All right, so I'm going to end it there. Thank you for attending. Good attendance today, and looking very forward to the yen potential. Talk about dollar yen and Aussie yen, especially because Aussie, as you know, I'm kind of bulled up on it. But we'll get this archive for you and get working for the post later. Okay, so have a good day, a good rest of your week, and take care, everybody. All right.